to the scene. It's your host TTP. We're flying high in the crypto sky, just you and me. From Bitcoin rush to Ethereum, we traded all the coins with the trading parity, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick, Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light, trying to trading peril. We'll teach you how to fight. Dive into the charts, the RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All trading Ganium, tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with a vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading peril. We'll teach you how to fight. Dive into the charts.
Hello, guys.
See that performance at the Sphere in Las Vegas.
you picture this going live in Las Vegas.
Yes.
That would be funny. It's a really funny song. How are you, Keith, today? How are you doing? I know you're
I'm good.
very busy.
Had a great weekend. Spent lots of time with the family and extended family, and have more of that going on today. So been busy, but good. And you know, sometimes it's good to have those distractions to keep yourself from staring at the screens all weekend long, and letting things play out as you expect.
Yeah, that's fantastic. And I was going to say that Bitcoin is below resistance on the daily. So I'm kind of itchy now to see what comes next. And we're going to cover all of that. We're going to cover the daily, and we're also going to cover where is that juicy chunk of liquidity sitting above the price, which is the perfect recipe for if we touch the right liquidity level, we might see a short squeeze. And that's always fantastic to see, especially when you have the chart right next to you and you start seeing the wicks start doing like this. It's fantastic. I almost start jumping from my seat when I see that coming, and I start getting itchy. What you think? Those levels at 70K could get us higher, or you think is too challenging this current resistance and no lower we go?
So you know, to me, first of all, you know, we of course had the halving the other day, and one of the funniest things, I didn't read a lot over the weekend, but I did check in. You know, I'm not backing out completely, so I did check in, and one of the posts I saw that just made me laugh was like, the halving was a nothing burger. What was all the hype for? That's bullshit. And I'm like, it's nobody ever said it was going to be up only. In fact, I've been saying for a very long time, it won't be up only. There's lots and illustrated all the history of the 20 to 40% corrections that happen sometimes right after the halving, and sometimes, you know, in the midst of a bull run. And so I never expected it to shoot straight up. Obviously, it did not. I do think that the macro still speaks to going up, and we're seeing a lot of green today, right? And so, yes, we have a lot of liquidity to the upside. To be honest with you, we have a fair amount to the downside. The difference is it's concentrated a little bit more, you know, so it's spread out a deeper ladder on the downside, and it is more concentrated into a few areas on the upside. And what I want to see is a deeper concentration of bid liquidity to really give us a good foundation for going after those resistance levels, right? So at the moment, we're toying with, and if I could share a screen, I can show you where I see confluence between what we have in fire charts, where the liquidity is, and where we have technical resistance on the candle chart. And so I always, number one, we were just talking about this liquidity here at the top and bottom of price, right? So here's support, and you can see some of this is, we have some gaps in here now after the last few days. Some of this has moved around, and to the upside, you could see where it was much stronger. At one point there was almost 75 million, and then another. Oh, excuse me, what am I looking at? At one point, it was 20. Excuse me. I was looking at the price. This was about 75 million, though, and then there was another 55 below it. So that was over 150, 150 million stacked up there. And now this is thinned out up top, and this, our highest concentration here at the 60K level in this zoomed out view, and this is like from about 59. Probably about 59.5 up to 60,000 and change. There's shy of 50 million there, right? Just at this one level. And what I want to see is upwards of 60, 90, 100 million stacked here, or maybe just double stacked. Give me 75 or 100 and another one below it. And that's really solid, like we had here. This was 96 million and another 93 below it and another 58 below that and another 30. This ended up being around 250 million stacked right here, and you see what happens. And this game of liquidity strength goes in both directions, right? If the upside has the big block, this was 134 million, it forced price down. And so at the moment, we're almost equal in terms of what's here in this range. Maybe a little advantage to the upside, but more concentrations here on the upside right now. So what I want to see is more volume coming in down here, which we note, on the left-hand side here, we have the volume scale. So I just, in simple terms, I want to see this get brighter to give us a better opportunity to make a legit run at this resistance overhead. So in terms of what the technical resistance is, you can see here, we are right now, we've been facing resistance at the 21-day moving average through much of the day here. The 50-day moving average is just above that at around 67,500-ish. And really the big one for me is the 69K level. That was a 2021 top, right? And look at all the times that we tested this, attempted to break out, but failed, right? Wick below, failure. One solid candle here, but wick below, failed. Wick below, failed. Breakdown. And then continued to lose things, came back in. And again, all these wicks below the line were signs of weakness to me. We had another single candle above, a down signal that pointed to where things were going. And so we just have not validated an RS flip here yet.
It's interesting to see that we still
We're maybe
have
validating one here at 59. If we stay above this level, and we had a nice retest here the other day, right? So that was good to see. That was on Friday, just before the halving, and some dip buying, occurred at that point. And so we have to we have to clear the 69K level, and then we could talk about that 70 up to where the new all-time high is now at 73, right? So this is where you're seeing this high concentration of ask liquidity, right? Look at this, from 70 up
75
to 76. There's a lot going on here. Okay, the deepest concentration right at that 75 level is still only not even 40 million. So
And have you seen today the red arrow appearing at some point during the day?
yeah, but I think I think I commented on that this morning, that it seemed to me that the daily signal was not valid. In fact, it did invalidate. I called it as invalid before it invalidated this morning. But what we do see on the weekly is we see some green. We have, and I think it's covered up by this actually, you know what? This also actually invalidated. There was this morning, There was a green signal here from the A1 algo, and it is now backed below. This fire signals when it crosses this blue dashed center line,
Mhm.
and it has retreated a little bit. So this maybe, this orange line here is the A1 slope line, and this is kind of the real-time momentum indicator in this algo. The signals are tentative until the candle close, but this line is real time. And so you can see that on the daily, it's showing uh, that momentum is not, is actually losing strength here. Despite the fact the price is up, we've got resistance here, and this just kind of means that signaling that it thinks that price is running out of steam. But what are you trading at this point? Are you trading to scalp, or are you accumulating for a longer term position? And I personally am in the long term game right now, and so I'm okay with a little bit of intra-day or intra-week volatility because I still think that in the grand scheme of things, things are bullish. Certainly post halving, things are bullish, and I'm wondering, um, you're a better technical analyst than I am. I'm wondering if we have a potential bull flag developing here, and if it does, we could chop through this range for quite some time, right?
Yeah.
So I keep thinking as we get close to and we've got a lot more of April left, but let's say we chop through April and we stay in this range. May historically in markets, we often hear people say may go away. So
Yeah.
what if we did chop through this month and maybe even retested the lows, potentially even went here, right? I guess
Yeah.
if it broke down, then that would invalidate the bull flag. But if it stayed in this range and then potentially breaks out at some point in time over the summer,
Yeah.
that that measured move from the flagpole up puts us in a pretty sweet spot, right? That's almost $108,000. I'm not one to call random upside targets, but if this were to play out, that's a reasonable consideration. Of course, we have what I consider to be a glass ceiling here on this diagonal, which is the lower end of what I consider the lifetime channel. You may draw yours differently, but um, that to me is going to be a strong resistance as we move forward. Right, we got to get past this all-time high, maybe consolidate in this range before we get that move up. I don't know. What are your thoughts?
Yeah, it's very interesting. Actually, before I cover the daily and the weekly as well, because I want to do a comparison, because there's many things in common, just coming from different indicators, but kind of the same analysis is interesting. I would like to see if you can switch to the 4 hour. I'm pretty sure there should be a red arrow by now.
On the 4 hour,
Yeah.
on
Yeah.
the 4 hour, we had an arrow a few hours ago, but note that this is only signaling what's going to happen over the next duration of that candle, of that time frame,
Mhm.
right?
So it's invalid.
Right. So it did validate because price did go down. And what this is saying is that it anticipated price would go lower, would not top this high here. So it did go lower. And then, we got to bounce. So still, even on the 4 hour, there's resistance here at the 100 moving average.
It's very interesting. Let me show the counterpart with my indicators. So what you're seeing here is the daily chart. We got my famous broadening wedge here. I hope I'm calling it right. I'm terrible with name of patterns. I identify them. I know their outcome, expected outcome, but I tend to flip their names randomly during the day.
Well, now in the age of political correctness and pronouns, you could say it's a wedge and it identifies as a flag or whatever you
Yeah.
want to do. You
Yeah.
can call it whatever you want.
Yeah. So basically, this is something widening, right? And it's meaning that we lost momentum on the daily. So this is RSI. RSI was going higher, double top here around this area, then lower lows, lower heights, dampiness, and here trying to find a structure to revert, because
Hmm.
what assets do is they are going up and down, and the price might be trending on the monthly and it might continue going higher, but the momentum is always going to do this sinusoidal thing. So is that is on our side, because we that is something that we can kind of expect that is going to repeat happening. And basically people call it uh, going back to the mean. And I guess this yellow line in the middle is the mean, and we're constantly flipping from being above to being below. And in this case, guess what I'm expecting? I'm trying to look for a breakout of the momentum over this orange line that I'm moving here. And currently we are above it. So if we close today at 50.51 on the RSI daily, we technically have a breakout. On Thursdays last week, I was calling for a breakout of this internal daily resistance in here. And I said, if we close at 43, that is above the resistance, we have a big chance of going to the next resistance, which is at 50. We did that over the course of 4 days. We did precisely that. Then now we are below two resistance, the orange one and the white one, this one here. Both of them are keeping the price there, and the price needs some energy to break that. But if it does, it can be big, because being above this for the first time after failing one, two times over the course of over a month, it's big. It's usually big. And that doesn't mean that it's guaranteed. So the RSI could break here and go there and then fake us out and come back here. But the point is that the vast majority of the times when you have multiple tests of a resistance and you break it, you have a good chance that it will continue in that direction. And that's what I trade. So on the daily, we are below these two resistance. It's very big. It's difficult. It might cause a low here and some maybe more difficulties to go above it. At the moment, it's breaking out. So that's good. That's positive for the daily. But on the hourly, is where I'm struggling to think that this can continue, because we were bouncing on top of this support and we broke below it, and now we are below it. So if we were doing something like this, I will be like, okay, we're bouncing on top of support. We continue our way up on the 4 hour. But since we are below it and we are testing it now as resistance here, I'm tempted to say that there's going to be some struggle in the shorter term on the 4 hour. And where is that struggle? If we look at the CPR monthly, we see that we did the breakout that we were expecting last week. That one continue going higher, and now we are struggling with the monthly CPR. The monthly CPR is the difference between being in an uptrend or in a downtrend. So if we are above it, we are in an uptrend, and now we lost it, and we are retesting it from below. And that's also the point of control of the volume. So we got quite a lot of resistance there. The good news is, if we happen to get lucky and we break through this area here that spans from 66 to 69.5, well, that's the perfect recipe to get massive fear from the shorts that currently are holding billions in shorts in this area here. All the people that were expecting now to start a downtrend have placed all their liquidity around here, and it spans all the way to 72, 73. It's back. So if it gets there, I will expect that to be painful and very short lived, just because that will trigger a short squeeze. But of course, for that to happen, we need to first challenge these levels and break them. And it's not necessarily going to be easy, because, as I said, we have all this resistance here. But let's see what happens. It's a Monday. There's a lot for the rest of the week. The things I'm worried more about now is the status of Total 3, the alts. The alts have been since the 13th of April bouncing on this, on the 4 hour, and not losing it. It keeps going higher and higher and higher. And I'm not saying this is a sell signal. Some people misinterpret my call this morning on Twitter saying, oh, you're calling for a top for the alts. The alts have plenty of room to keep growing and keep going higher. Potentially, the alts could continue doing something like this, and that will throw them even higher from where they are. But what we need to do is to pay attention for a breakdown here. And since the flow of the cash in crypto goes from Bitcoin into the alts, into Ethereum first, and then into the rest, if we see 4 hour losing momentum, I will expect to see then the alts to do that at some point. So that I'm hoping to see some bearish move here, and that's why I'm taking more caution with the alts. And with Bitcoin, well, if Bitcoin has that strength to overcome this resistance, well, it's going to go really high. But if by the end of the day, this becomes just one more of this resistance, there could be as well a lower low. And this is the funny part. People listen to this analysis and they tend to say, okay, so you're saying it can go higher or it can go lower.
Well,
No,
it can at any day.
yeah.
That's the game.
It's funny, but that's what it is. But you need to know what's the recipe for each of these
Each
scenarios,
scenario. Sure.
and then plan accordingly. Like if I see that, so you need to think logically. If I end the day today and I see that we've broken out on the RSI daily, we are above that resistance, I tick a box and I say, we have one thing on our side, right? We have strength, we have momentum. What about the price? What about the liquidity? Where is the liquidity pack? Is there incentive for them to continue going forward? And that's how I do my analysis. I don't do my analysis like finger in the air, it's going to go higher. Oh, I was wrong. I don't know. I was just guessing. No, it doesn't work
Right.
on guess. It works on all these variables and all these things, and then prepare a plan. And then if the plan starts leaning towards one side, you have your plan ready. You just execute it. If it goes the other way, you have the other plan. You never marry one side.
Yeah. My two favorite things I read on X this weekend, one was the one going, complaining about the halving being a nothing burger, that why didn't price move? And the other one was a guy who responded to one of my posts and called out some arbitrary upside target above 75, by the way. So that's the next move. Trust me. No, he didn't say trust me. That's the next move. I got the last three calls right. You better listen to me. And my response was, one, I don't listen to anybody who introduces themselves by telling me how great they are. And two, I don't listen to any random arbitrary targets without any sort of analysis, no chart, no context, no explanation, nothing, just a number in the sky. And so, I'm actually strict about that. We're strict about that in our Telegram community. I'm strict about that on X. If you're going to post something, I'm open. I want to hear what your rationale is for those targets, but don't just throw out a random number and expect people to follow you. And for God's sake, don't follow anybody who just throws out random numbers. If they're not explaining and you're not understanding the rationale for those targets, that's not the person to follow. In fact, unfollow that person as fast as you can.
Well, I remember back in the day when I started trading, and my decision making in terms of following influencers was based on the last three calls they made. If I found someone in a YouTube channel and I watched the video and that guy say three things in a row that made sense, I was okay. I should go all in now, because he was right the last three times. But very quickly you learn, and those lessons are paid. It costs a lot to make those mistakes, so you better learn quick. Some
I, I
people keep doing the same.
I call those mistakes the cost of education, right?
True,
I
true.
mean, if you were, and at this point, if I was getting my PhD at Harvard, I'd probably be about, I'd be right about there on tuition. Um, so in terms of what you're looking at in potential moves in either direction, what's your invalidation? Um, and if it does break down, how low do you think it can go? Do you think it will hold the range, or do you think that 59K is in jeopardy?
Um, Let me show you this. I love looking at higher time frames to understand where we are. And in this case, my thesis is very simple, and I just look at the monthly, and I'm just paying attention of what is this candle going to look like, because there's so many people that are looking at the monthly, and it's very difficult to make uh, different interpretations of this. You can make different interpretations of other charts, but the monthly, there's just a few candles to interpret here. There's just a level of support and resistance here that spans from the highest close to the high of the previous bull market, and then you have a breakout. And what are people looking for on the monthly? Something very simple. People just want to see that we can hold this level, and
Right.
this level is as supposedly our support. So we have literally here 1 month to prove that we can close with some dignity here. If we close below this close, that is not good. That's something that people are gonna say this is a disaster, and we're gonna go lower.
So are
And
you saying just a red close or a close below the range? Because a red close keeps us still in the range.
yeah, but I would like not to see an engulfing candle. At least that is my wish for April. I mean, April and May could be red, fine, but I don't want to fall below this to stay long. I have some longs. My longs, by the way, I'm building a position in spot, so I'm not selling if I see a red candle here. I'm just adding more, and at these prices I'm not doing any you know disposing my spot. I just want to add more and add more and add more.
Right. So did you add more? I know that you had sold 73, and I think you said you bought that dip to 61 a week ago. And
Yeah,
did you buy the retest at 59 a few days ago?
59 I didn't buy, but I potentially bought, but something extremely small, just because I have DCA bots,
Hmm.
not the DCA, not the martingale bots, these
Right.
bots that every day buy the same amount.
Like a TWAP bot.
Yeah. So I'm constantly buying and buying small amounts and adding to my position. So potentially I bought at 59, but that's something I wouldn't consider, intentional. It's just repetitive. Um, I just bought 61, and I have an amount that I will say, if we start running from here, I will feel sorry because I will like to have more. That's
Right.
why I want the red arrow to be what happens. That's my preferred scenario. That's my preference, but I cannot claim for Bitcoin to do what I want, right? I just look at this, and I'm constantly seeing this candle getting filled and looking more red, larger, and saying, yes, I'm going to buy more. And then it starts getting bought, and it starts pushing against resistance. And that's where I'm starting to get itchy because, well, what's going to happen? I'm not going to end up buying enough and as much as I want, and it's all good. If we keep going higher, I will find another spot that is also high value where I can add more. So
Hmm.
that's kind of my plan, but I don't chase assets. And I think if we close, we create an engulfing candle, just following your question, engulfing red candle without a wick to the downside will look like we undid everything from March, and we're
Right.
just back to square one below resistance. And that is a recipe for disaster in terms of the short-term traders and the beginners are going to just think, okay, triple top, back home, sell everything, whatever, it's the end of everything. And the advanced traders are going to buy this dip like crazy. I
Mhm.
have a few indicators. I think I have it here. This is the long and short-term holders and throughout the history of Bitcoin. And you can see that the long-term holders, once the price starts pushing into a bull market, into a blow of top or into a very big rally,
Mhm.
they start selling.
Right.
They do the opposite, and the short-term holders are just buying the rip, and they do constantly that. And as soon as the price starts coming down, they start selling because they start having fear, and they were buying all the way up, and as the price goes down, they sell. And the long-term holders do the opposite. And if you zoom in this area here, you can see that it starts getting shallow. So their selling of the long-term holders starts slowing down because they see opportunity. They
Mhm.
see things precisely the opposite as the short-term holders. So I'm looking into that shallow area there, and I'm comparing it to what happened when we crash here. Like they started selling and then they slow down and they waited again for opportunity. And they saw this area here at 38 as the beginning of the opportunity. And they bought all the way here until there was another run.
And we talk, we talk about patience. Look at the bottom of that trough. Look how long they waited for the
Yep.
opportunity to
So
start buying again.
you want to be a great trader, you need to know who to focus on. Focus on long-term holders, large wallets, and stuff like that. I have plenty of indicators that I've been trying to find how to monitor all these things and how to automate them. But I found that the best thing to do is very simple. Just keep monitoring these things and keep reviewing them. I have tabs, and almost every day I go through the most important ones. And if I see something sneaky going on with the large holders or long-term holders, I immediately start, hey, wait a second. We are going to 73. These
S-
people are selling. These people are selling. And
s-
everybody say, yeah, no, this time is different. Don't worry, don't worry.
Speaking of something sneaky, did you see the big sell wall that came in over the weekend, like before the close? Um, that was like, I don't know, stacked. I think it was about 50, 60 million that came in overhead. And then I think it got hit. Part of it got hit and then it disappeared. Price spiked. Uh, a, a chunk of it came back in. I'm talking about this block right here.
Oh, I see.
All right. And I saw that and I was like, So this was right below what would have been a green close. So this basically blocked suppressed price from a green weekly close. And then I was wondering, I was actually speculating whether this might be one of the institutions you know who are selling ETFs. I was wondering if they kind of put this guardrail up here to keep price in place until they could start buying again, right? Because they can't buy on the weekends. TradFi is closed. So, that was just speculative nonetheless. Once this disappeared, price was able to move up again. And looks like
Question.
just now, whales just bought, these brown mega whales just bought again just now. Let's see what that order was.
But what was your interpretation of that block? Because it cuts so sharp that I'm not sure if this is a limitation of the tool or if they really got liquidated there or if they pull out just before the price hit that level.
Right, right, right. So it's, when you're watching it in real time and on Fire Charts 2.0, which is the version we're looking at here, um, the price and CVD move in real time or real close to it. The background, the order book part, depending on volume and trade frequency, the APIs get throttled sometimes from the exchange, but this updates every 1 to 3 minutes. And when you're watching it happen in real time, you can see if it's getting hit. Sometimes it's hard to tell afterwards, but what you have to do is you go back and you calculate. You can calculate. So, for example, if this was, let me just zoom out a little bit so I can read this a little bit easier. I think this was, where was this? Down here, 65. Let's say that was 25. Let me try and get a timestamp on this. Maybe it was this right here.
Oh, wow.
Right. So that was almost 50 million, 47 million. And this was until 421 at 819. Then we can go in here on the daily. And this was, I'm not looking at the same block here. So I can add this up. We'll just use round numbers here, right? So it was 10 million, another 20, 30, 40, 45. It's about 50 million bucks, let's call it. Okay. So what we can do, we're here on the normalized view right now, and that makes it easier to see these moves. But if we switch to absolute value, we can see how much each move was that each individual order class did, and blue is the sum of those classes. So just before that move, the sum was at net positive 3 million.
Wow.
And it went 45 million. Okay. So that was, give or take my math, on par with that move. So it looks like it was taken.
I'm interested to see what's going on right now, because I think the price is getting some volatility right now. We are getting to almost.
So we just had brown mega whales bought, purple whales bought, red sharks bought, green bought. There's a lot of buying right here, and it looks like they bought and then they sold. So let's see what the sum of this move was at 82 million. So there's about 12 million in market orders to clear out those levels. And it's worth noting that there's a lot of times in the order book where there's not enough liquidity for whales to make these big orders. Otherwise, they have slippage, right? So you'll see brown often make their orders when they're up against deep enough liquidity, like they had here, that they can place that order. These are market orders. They can place these orders with limited slippage. And so here they were up against this liquidity here, and they bought into it. So that helps clear out the ranges. So, it's common to see, when price reaches new levels, it's common to see a little bit of selling. You just gave a great illustration of how those long-term wallets are selling when price goes up. That's what you do. That's how you minimize your slippage. You sell when price is going up, you buy when price is going down. And in this instance, right, maybe we'll see if price can find its footing. The problem here is there's not a lot below it, right? So it's easy to see, for price to fall back down unless we see more coming into this range right here. There's less than 5 million bucks there at the moment, but in the next few minutes that could change. Looks like purple whales just made another market order, sold again. So, and they're doing so because they're in liquidity that they can do that without too much slippage.
Yeah.
Right. And you see this is changing right before our eyes. So I think that, we know this is strong resistance here. We've seen it on the candle chart, with the technical indicators. We're fighting really for this level at the 21-day moving average is at 66.5, give or take. The 50-day is at 67.5. And if we look at that in terms of where liquidity is, we see a bit of a barrier before that 67.5, but there's not really anything Here we go. 67.5 has a little bit, right? Nothing noteworthy. It's $3 million. That's nothing. And even 68. So surprisingly to me, we're not seeing the deep concentration at 69, right? Less than $5 million at 69. So if we can get past these moving averages that we're dealing with right now, then this becomes the next target. And I think if we can clear this, the price would leapfrog 69K. I think it would move through 69K without too much friction. And then we get retested here. And after that happens, whether 69K holds remains to be seen, because we have so much history with it not holding. You know, all these failed attempts. I would not be surprised at all to see, and this is where maybe playing some of the psychology of the market comes in, right? Everybody, I won't say everybody, but a lot of traders, especially retail traders, are expecting price to just zip up after the halving. Okay. So we've had some appreciation, but we're not as high as we've been. We're not in all-time high territory. We're not even above the 69K level at this point. So let's say that we do work our way above this, and then we break 68 and price shoots to 70K, maybe even 71. If we get up in this range, I could see this where I can see late longs aping in, FOMOing in here at these levels, which you don't want to do. And I can see shorts stacking all the way up here as they already are. We know this, right? And so then it would be a matter of squeeze the shorts and then go liquidate the late longs and come back, right? And 69 could fail again. And we could do that. We could do that for months. We could do it for days. We could do it for weeks. We could do it for months. And it all, for me, it all comes down to, until we see more bid liquidity, higher concentration, brighter colors, whatever you want to call it, until we see that coming into the bid range closer to price, then I don't anticipate us making a real run at 75K until we see some strength down here.
What do you think about the narrative coming from the Hong Kong ETF, Bitcoin ETF? Do you think that could have an impact on the price in the short term?
Sure. In fact, I would expect that it would have a big impact. I would expect that we would see demand come in just as we did. Well, maybe not exactly the same as we did with the US ETFs, because they have the luxury of a bit of, having had the ability to watch what happened as the US ETF market has started to evolve, right? Remember, we had 10 years of pent-up demand. So after that initial grayscale sell-off, that ETF demand is what really drove price through the 40, through the upper 30s, through the 40s and 50s, and up to where we are now. But we've seen now that demand is leveling off here, right? We're not getting the hundreds of millions in net inflows every day like we've had. In fact, on Friday was our first positive day of net flow in the prior 5 trading days. Now, interestingly, it looks like Grayscale's outflows may, keyword may, be trending down. In other words, they're tapering off a little bit. Sure, there's some spikes in there. That's no straight lines in anything, right? But it looks like they might be starting to taper off a little bit. This obviously has to continue to validate that. But if that happens, then that obviously means that inflows are going to be picking back up. What's interesting here is that we had several days where most of these 10 entities, all right, we know Grayscale's been selling every day. BlackRock has been buying every day, but there's been several days where the other 8 were just flat. They sat on their hands and watched things develop. And so I think that maybe the Hong Kong situation has the benefit of now knowing that it's not, they realize it's not an up only thing. And if they all ape in, it is going to go up only. But why not wait and buy on dips and corrections?
Yeah, and I'm sure they will be. Yeah. And today we are actually having the first green candle on the ETFs in US. So it's been for a long time just red and yellow here.
Right.
And in here we can also see this oscillator that's based on the volume. And every time that you enter in the light red, it's just coming down. And we started coming out from that, getting into the dark red. That's a good thing. And as soon as we did that, we started also going higher in the prices. So this is an aggregated symbol of all the ETFs in Nasdaq. So that is positive. We saw the breakout, actually, the first breakout, we call it on the 4th of April, because the volume was coming down lower and lower and lower. But now we start seeing some um, good action in terms of the volume from the ETFs.
Yeah, I would expect that that demand is going to continue, and I would anticipate that we have at least another wave of U.S. institutions coming in. They're not nimble; they don't move fast. They take their time. With and I think they're very, very cautious and concerned about the regulatory environment, still not very well defined. But I think there's a lot of big money on the sidelines waiting to come into the ETF market, um, and they're going through their due diligence process now.
Yeah, and that takes time.
Mm-hmm.
By the way, in terms of the price action last week, there was a massive CME gap on the daily. So if I put this on daily and I zoom out, you're going to see the CME gap. The CME gap is formed by this gap in between the closing prices and the opening price. It's just because the CME is not all the time open, the market.
Right.
So you have from 64.1 to 67.1. And we spend all these candles here, all these days thinking, okay, there's all this liquidity here. When are we going to close the gap? And we took a little bit this day until almost 65, and we left the most of it out. And now we are starting to close the gap. There's just probably a 10% left of all that liquidity. So my question is, what's going to happen after we close that gap? And I'm asking that question because there's two things that are very important here. Number one is after you close the gap, if you are in a downtrend and the price wanted just to go lower after you fill the gap, then you don't have more incentive. Of course, there is liquidity here, and that's where we can see all this billion in liquidity to be taken from liquidations. And that's what many people are monitoring right now, that if price manages to get to the low 70s, there's billions there. And if we touch that area and we go above it, then you ignite the whole short squeeze, and that can take you very fast, very high. But that incentive is a little bit further away because the liquidity starts from here.
Mm-hmm.
That's where you started dropping. So either here we fill the gap, and that was it. That was all that they can move the price high, and they're gonna leave that liquidity for later, and then we dump from here. And there's one argument that supports that idea. And I'm not saying it's gonna happen. I'm just gonna show you the argument. If we go now to the 1 hour, there's a CME gap that formed below the price, and it's located at 64.5. It's in here.
Mm-hmm.
So if the price went and filled this gap, then it needs to decide, do I go lower here and take the 64 because I ran out of steam and I cannot continue going higher, or I just ignore the 64 and I go higher, or I take the 64 and after taking the 64 I start going for those shorts that are here. There's so many different mutations. And for that, I will look just into lower time frames to
Do you have
see.
a metric on historically what percent of CME gaps have been filled?
I don't have an official source, but I have seen people posting on Twitter. Of course, people post on Twitters anything they want and
Right.
not always saying what's the source. But some people were saying 95%. Anyone can say, yeah, 99.98 is the accuracy, and then it's just bullshit. But I think it's pretty high. I continue for couple of years monitoring CME gaps for Bitcoin, and of course we leave some behind, and those are really painful because you start counting on them, and then suddenly you leave one behind, and there's one at 20k. There's one at 20k right now, at 19k, somewhere in that area, and we talk about it for months, and it influenced me bad because I was constantly thinking, we're gonna fill the gap, we're gonna fill the gap, and we never felt it.
Yeah.
And then we never filled it. So this one, it's important because it's very close to the price, and there's not necessarily a lot of bullishness right now. The momentum is down, so it will be very easy for the price to just come here, take the 64, and there's this remaining there. So that is my little grain of sand.
Well, in the past couple of minutes, since you've been talking, liquidity has been moving here in the order book around the 67 range. We actually had support came in here briefly, and that's when Purple Whales bought again, and and then that support went away, and they started selling again. But I don't think, I think that this is just normal trading, right, along the way.
Mhm.
And 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 with stuff like this, especially if you're investing, like you said earlier, always good to zoom out and gain some perspective, right? We have this wide open range here, basically, where we're in this zone that is, in my opinion, kind of difficult to trade, right? So I wouldn't be a buyer here. I I'll buy here all day. I'll buy down here all day. But I already have positions from these levels. Um, Actually, happy to say nothing above 65 at this point. But I think that eventually we're going here. Whether that happens today, tomorrow, next week, or next month remains to be seen. It's This could happen very, very quickly because there's not a ton of liquidity here, and until we see these bigger walls coming down or coming up, I think we're going to range here.
Mhm. Mhm. Yeah, and today, unfortunately, I haven't been monitoring the Nasdaq and the S&P. But have you been checking how is in general the markets?
I have not, but I do have I might have a chart open here in one of my many tabs. Let's see. Here we go. Looks like they're green today. Everybody's green.
Everybody's green. Yeah, I was receiving some notifications or something positive. I think I was showing it on the screen. It was saying the Nasdaq is getting some buy signals.
All right. Everybody's green. There's a green dot. There's a green arrow. So yeah, markets are up. Markets are up today. So maybe we challenge this and we see a reversal off of uh, that that dip
S-
we had recently,
mhm.
and grind into this upper range. Right at the moment, it looks like price has popped above the 21 day barely, and now has to take on the 50-day moving average, 67,500 or so, depending on what exchange you're on, and it's one level at a time. Right, clear this, then this is going to be a bigger issue. And I do think that price, just based on where liquidity is now, I do think that price can move through this handily. Now, whether it can stay above there is what I have in question. And in fact, I'm not even taking any profits at this level. Um, on my recent setups, I'm not taking profits here because it looks like price is going to move up past that. I will take profits if we get to this level, not fully, but just to scale some of those profits out that I can later recycle into another dip. Um, But this to me, this is the critical level that we need to validate an RS flip on before we can really have, at least before I can have conviction that we're going to take out this all-time high.
Yep. Yep. That's very interesting. At the moment, I'm very intrigued with what's going on with the RSI on the 4 hour, because it broke down, it retested, and then it went for a second retest, kind of similar to what it was doing the previous week, but upside down. So the question is here: is this gonna get a rejection there? That level, let me flag it. So that was our first retest. That is a second retest, and that is currently resistant. Is it gonna go back into the range? If you go back into the range, that's extremely crazy price action, because you don't see that normally. That will be really bullish. Really
Right. And
bullish.
so you know, it's to me, it's like the great shakeout continues. Okay. We expected to see it happening ahead of the halving. And now that the halving is complete, most people, rightfully, in my opinion, think the price is going to go up. And it seems to be doing so. You just can't make the mistake of thinking that it's going to go up only, right? There's always an opportunity to come back and test this or test this, and a potential breakdown. Obviously, you can't discount the possibility. The probability, the longer we stay up here, the probability of going down to this range may be reducing, but until we see more in here and coming up, to the 65K range, uh, I just I'm not anticipating a break beyond 75 until we see more bids
Mhm.
down here.
Yeah. I mean, if I had to do a summary, I would say the thing I care the most today is how we close this candle on the daily. If we close above this, good things are very likely to happen. If we get rejection and we are back below both resistance, then unfortunately we should see another lower low here, or at least a low here, a challenge of this support. But it's good. Thanks so much, Keith, for coming in again. And guys, remember that every Monday we are with Keith religiously. It might happen at different times. We might get it wrong and not always at the same
We're,
time,
we're
but
juggling schedules, man, but we're making it happen.
we are making it happen every Monday. So hope to see you next week again, Keith. Thanks for coming in.
Likewise. Thanks for having me. I appreciate it. And I will just leave you with one parting thought. If price does manage to clear that 50-day moving average, based on how things are set up right now, we do have a block of almost 12 million in ask liquidity at 68, but not a lot between 68 and 70. So not a lot of friction to get 70K. If we break 68, I think 70 comes relatively quickly, unless we see, asks start dropping down into this range. But right now, the way it's set up, we could get through here. We could get to 70 pretty easily, I think.
That's good. Thanks, Keith. I'll see you next week.